All right, I think I am just about done connecting to YouTube. Hold on. Go sit down. Go sit down. Go sit down. Go sit down. Gotta get the dog in order early this morning. Jeez. All right, now. I know, right? All right. So I don't want this double feedback. So let me do this. So guys, again, I am exploring. As you guys know, a lot of things transpired this year, and some things a little different. So all right, let me see what I want this. This. I don't want to lose this stuff because I might need this. Let's see. All right. I think I'm set up there now. We'll do one more thing, then I will get started here. Try to get started closer to 8, but I might start a little bit earlier for the early birds, and just to see how this is unfolding. All right, again, folks, I think I am live streaming this as well on YouTube. So hopefully, if it is coming through on YouTube, somebody can see it and they can let me know that they do see it, because I am new to this game. This is fine. This is cool. So I'm able to monitor YouTube on my phone and able to type messages. Turn this value now so I don't get a double feed. This is great. All right. And so one of the reasons I said I'm gonna do this right now is because a lot of oh man, you awesome, appreciate it. Is I posted several videos early this morning, folks. That's because there's a lot unfolding in our markets, and folks who don't really understand technical analysis, especially when it works like it's supposed to, and it definitely works well in trending markets. And we got a trending market. I mean, we're trending to the downside. And if you can follow the trend channels, if you can follow the moving averages, the two major ones right now that's working like a charm is the 20-day moving average and the 50-day moving average. And I am going to try to mute myself on YouTube because I'm getting a delay. Let me see something. Do that. I don't know. No, I'm not gonna fool with it because I'm not sure how to do that. So I don't mess nothing up. All right. All right, let's just go back here. I want to point out one thing real quick since some folks are here now. Let me point out one thing, and that is the overall breadth of the market and what it's been showing us. And in addition to um, what's been happening in general. So stand by for. I'm still trying to find a way to mute this YouTube because it's starting to irritate me. But I think I'm gonna do this anyway, just the way it is. All right. Needless to say, just gonna turn my volume down just a bit. I just turned my volume just a little bit. I want to make sure you guys can still hear me. So I don't want to irritate myself, but turn my volume down just a tad bit, but want to make sure you guys can still hear me as well. All right. So what you see on your screen right now, this is the daily chart of the S&P futures. And what I did here is just by looking at this, the way price action was moving this morning, I think we have possibly established a new channel or a new downward sloping zone. So here's a weekly chart. And originally, when we started this downward move back at the beginning of this year, we were hitting against this particular trend line up here. And when we had this big sell-off here, we possibly established a new zone. We have not been back up to this level just yet. And depending on what happens today, it's like I told you guys earlier, Fed minutes are out today. Not the Fed meeting, but the Fed minutes are out today at 1400. And what I've noticed is that this year, every time right after we had the Fed minutes release, markets have sold off prior to the next Fed meeting. So that's something that gives me means for caution this morning, believing that the markets could be in store for the next leg down. Again, similar to what we saw here. Similar to what we saw here. And as you can see, it's like we possibly established a new upper trend line. We've hit this level and sold off, hit this level and sold off. I'm gonna switch back to a daily chart. And if we are at a level of resistance, folks, we could see a massive reversal in price action sometime today. And what I noticed early this morning by looking at the looking at Asian equities, looking at Europe, they've been struggling this morning. They've been struggling already early this morning. You know, they opened before us, and that could be a precursor of what we could be in store to see um, for today and maybe the rest of this week, maybe the rest of this month. This could be a very brutal month for stocks. So here's a daily chart. I'm sorry, here's an hourly chart of the S&P minis, hourly chart over the past 20 days. And again, here's that zone. And here's those trend lines as it relates to the daily chart. And you see how price action made it up to the trend line there. Didn't quite make it up here. Struggled, pulled back. And here's where we are now. So there's room when the market is open. There's room for a move to the upside. But it's going to run into resistance right here at that level. And then if we do break through that level, we're running into resistance up here, which I don't really think we're going to get that high. Look at the full stochastics in the hourly chart. It's starting to roll over already. Wins percentage starting to roll over. RSI starting to roll over. So there's a lot of things that unfolded early this morning underneath the surface that needs to be paid attention to. Now, what's another tool that you can pay attention to that gives you some type of a precursor of what's to come? Again, pay attention to the VIX and the VIX futures. So I've been watching the VIX futures this morning. And this is what I see in the VIX futures. And I really didn't map this out the way I did this morning. But if you look at let's stretch this out. Look at the daily, it's a daily chart of the VIX futures since this year. And I'm gonna even take this out a little bit further. So here is a year time frame of the VIX futures. And if you guys watch my early morning videos before I even show you this daily chart, look at the monthly chart. And one thing I expressed is this cooling action. The VIX, folks, has been pretty much gearing up. It's been gearing up for the past year, and it has been forming a heck of a pattern in a monthly chart. This pattern on the monthly chart cannot be ignored. Back in 2020, you see how we got that big move spike up. VIX had that big spike up, and then it sold off. But look what it did. It did not come back down to these lows here. Not at all. What it did was came back down from 2020 up until now, and it's starting a rounded bottom and building up a lot of momentum right here. Look at that. And it looks like it's ready to break out. Look at the cooling action in the full stochastics. Look at the cooling action, wins percentage. And look at the moving RSI. It's trying to make a move higher. So now that we see that, what's the near term showing us? Again, here's a daily chart. Here's a daily chart of the VIX, and look at this. So pointed out how VIX has not made it back to those lows that it's seeing around 2020. It's been making these higher highs and higher lows. And you can see that clearly by looking at this daily chart. You know, the VIX would get up to a certain point, and then it will pull back. But look at this low that we seen back in November, 1590. Have we made it back to that level? Not at all. Not at all. Not at all. It's been making these higher lows along the way. Higher low there, higher lows here, higher low here, and higher low. Look where we at, right at the apex of a possible triangle pattern breakout. So Marcus, I had a decision point, and I think that decision point could unfold today. We are at a decision point. Look at the highs on the VIX. Got up to as high as around 36 back in February. Pulled back a little bit, but on the when the VIX pulled back, it did not create lower lows, and the highs almost stayed level. All of that just tells me that the VIX is possibly ready for a breakout move. And if you guys have been following me this year, I told you that my ultimate goal is I think the VIX is going to break out above 40. And again, if you pay attention to that monthly chart I just showed you, it's just a telltale sign that it's only a matter of time for it to happen. And looking at the full stochastics for the VIX on this daily chart, right, back to oversold territory. Wins percentage back to oversold territory, but look at what it's doing. Like it's ready to punch out of this oversold territory. And look at the wins percentage, like it's ready to curl back up. So it looks like the VIX is really just having a nice little consolidation time period for a possible breakout. And that breakout could be any minute now, any day now, any minute now. So for a lot of those folks who are buy and hold investors, they are in a process of probably about to be hurt in a big way. Because if the market starts breaking down to the new lower lows, let me show you guys what we could be in store for. So if this VIX finally decides to break out, we can start to see the markets really see some new lower lows. Before I switch to S&P, here's a 4-hour chart on the VIX futures. See how the VIX futures have just been consolidating, even on this 4-hour chart since April. It's been consolidating in this area. Consolidating in this area. And it looks like we are probably at the end of this consolidation pattern. We could be at the very end of this consolidation pattern after we establish this new triangle pattern here. So again, what could be the catalyst to cause the VIX to break out of this pattern? Possibly the release of those Fed minutes today. Now let's take a look at the S&P, the actual S&P, not the futures, but look at what some of the possibilities are. Now, here's the channel that S&P is in now. And of course, you see how we have been moving through this channel. So there is a little bit more room to the upside, but I don't think we're going to make it to the top of this channel this time. I think we're ready to come right back down. That could be a drastic move down for the S&P. Now, if we was to draw a trend line from the highs that we saw back in 2020, right before the market plunged, this is where we'll put the S&P. That is where we could be heading for the next level on S&P. And ultimately, that would be a rollover from where we are now and a drastic move down that could put the S&P well down below 35, where we at now. Well down below 3,500. So I'm looking for a massive move sometime this summer, and that could be happening very, very soon. But I think that S&P is ready for a massive rollover. Another thing, besides the VIX, besides the breadth of the market, show you guys something else. But have anybody been paying attention to crude oil? I'll show you guys crude oil. Crude oil has been showing some weakness. A lot of folks probably wasn't prepared for that and was not aware of that, what crude oil is showing us. But the last time crude oil did this, so I drew some trend lines in here because we already fell below a major trend line. And look at the TTM squeeze on crude. It's showing that the momentum has been fading. So crude could be about to give up the ghost. The last time crude did that, what happened? Our markets did the same thing. Last time crude oil hit these levels and it had a major sell-off was in 2020. We had a big breakdown. Crude came up again and it's had a big breakdown. Let me go to a daily chart of crude. Let me stretch this out. So granted, I still think longer term crude may be looking to head higher. However, in the near term, right back here, we see the 2020 COVID plunge. So when crude hit that level, it sold off back in 2020, all the way down to this low of about 670, 667. Don't think we're going that low. However, this move here could be reciprocal and could be just a precursor to what we probably be in store for now. We could see the same type of move that we've seen in 2020. We could see that now, but probably not that low. So in other words, when crude sold off in 2020, we had a big sell-off in the regular stock market. I think we're going to have the same thing that's happening unfold right now. And let me go to a longer term monthly chart of crude and show you guys the setup as well. Move that. So here is a monthly chart of crude. You can see the 2020 plunge right here. Boom. Price action in crude got on a roller coaster ride to the upside. Started hitting areas of resistance, and this is strong area of resistance. This is why I had marked this level prior to price action even making it to this level. So if we look to the left of my screen, you'll see that was going to be a strong area of resistance for crude. So look here, between 2011 to 2014, right before crude started to really head lower, you notice that price action hit that ceiling and was unable to break through that ceiling. So within that range was a particular either fail or breakout range for crude in the future. And then what happens now? We made it right back to that level right here. And look what's happening already. Went up to the top, very top trend line and got rejected. Tried to go back up here recently. Looks what's happening now. We're starting to get rejected already. So we could see a continuation to the downside in crude, folks. Now, let's put in some possibilities for where crude could possibly be headed to. I don't think we're going back to these COVID lows personally. That's what I don't think, but we could see. Had to wait and see. But I do think crude is going to look at some previous levels of previous support, previous resistance, should I say. So if I draw a trend line from this level right here in 2018, that could be an area where crude will make an attempt to test first. So we could be headed right back, right around to at least 77 bucks first. So crude could be headed right back down here to around 77 bucks first. And then if for some reason we can't hold that level of support, the next level looks to be right where we saw the right back where we saw the 2020 highs of crude, which would take crude right just below, right around 70 bucks, folks. So crude could be headed back down to about 70, between 65 and 70 bucks sometime this year. Probably very, very soon. So with that said, again, when crude sold off in 2020, which is right here, the market sold off. And I think crude started selling off before the market sold off. So if I was to just duplicate this trend line from the 2020 sell-off in crude, just move it up. Right, we had this pivot point right here. We could be in store for the possible same type of move. So that would take crude right down. If I was to draw a trend line right here, right there, that's perfect. That's a perfect. See, previous levels of support resistance, folks, it works to a T almost. There we go. So I just drew that same type of angle from the 2020 sell-off, and I just duplicated and moved it right up here where we starting to sell off from crude now. And that would take crude right down to just about 75, just below 70. So we could be in store to see crude head right back down to the 70 level. And again, for those just joining me, when crude sold off last time, the markets did the same. Now let's go back to S&P E-minis. Yep. So if you're just joining me and you joined me on Zoom, and if you don't have a question yet, just mute yourself for me if I didn't mute you already. So again, if we look what's happening in pre-market, and as I was just telling folks, I think we the S&P E-minis possibly established a new trend channel. This dash trend channel, this dashed upper level of resistance is what was established earlier this year. And as price continued to sell off, we did not make it back. We haven't made it back up to that level yet. We established a new level of resistance right here. And again, it's like I said earlier, for those just joined me, that Fed minutes release is set to happen today at 1400. That's not the Fed meeting. The Fed meeting is not for another 2 to 3 weeks. But normally after a previous Fed meeting, about 3 weeks exactly, 3 weeks exactly later, at the Fed meeting, 3 weeks exactly later, Fed normally release their minutes. And normally after those minutes released this year, what's been happening is we've been seeing these sell-offs. So that could be the next catalyst to cause the markets to stall this morning. They could get a big pop this morning, and it could stall right here at this upper trend line. Now, if the bulls get lucky, they could try and push it up here to the top, to the upper trend line. But I don't think we're going that far. Okay. Um, in general, no matter what happens today, we're still in a bear market, folks, and this bear market does not look like it's going to be ended anytime soon. Now, with that said, let's look at a real bigger picture to show you guys how long we might be in this bear market. That's probably the ultimate question. I had to get rid of some of these trend lines to show that, but get rid of some of these trend lines. Mm. I think we are setting up for an historical move. Probably something we've never seen in our lifetime. This could last for a couple of years. So here's what the quarterly chart looks like right now. Normally they say recession, you have to have at least three bad quarters in a row. I think we are on track to see that. Here is the 2020 COVID drop. So that's that trend line there. If we are going to have any attempt to avoid this recession, this quarter has to be positive that we're in now. In other words, this quarter, the markets need to see a positive quarter. Do I anticipate that happening? I don't. I think we are in, I think we're already in a recession. Why does this thing keep erasing on me? So we are almost at that level where price action saw a major drop in price action in 2020. So this is the 2020 highs. We hit that level and we sold off. And then all of a sudden we got a nice rebound, breaking right back above that particular level of resistance. And now we're back to possibly try and test that level. Looking at the full stochastics, Williams percentage, they all are fading on this quarterly chart. So if we break through, if we don't have a positive quarter this quarter, we break through this level, where could we be headed? Right back to the COVID lows. So that's a very strong possibility that markets are going to come back here and test these COVID lows. So we have a bad quarter this quarter. I guess you're gonna start to see all the talking heads starting to agree that, yeah, we're in a recession. Yeah, thanks for letting us know, after the fact. But I think we're already in recession now. So again, pay very close attention, folks, this morning to the VIX. Pay very close attention this morning to certain levels in the S&P, and I'm gonna even give you a level to watch this morning for S&P. Let's pull up the S&P. A couple levels of watch on the S&P this morning. S&P could very well gap up. If it doesn't, then markets could be in trouble. So when markets open this morning, what I'll be looking for is to see which way price action trends. If we break above this trend line, that could be very positive for markets. And then we can see the S&P maybe break above, maybe get close to 4,000. So we could see an S&P rally up to about 4,000. If we do start to rally this morning, a couple of things that you need to be mindful of is that if we hit this level around 4,000, that's going to be resistance here. That could be resistance there, and then another level. If we get up to that level today on a quick pop, here is a level or an area that we need to pay close attention to, is this particular gap. So there's a gap in price action right there. And that was on a 4-hour chart. I just showed you guys. There was a gap on a level on a 4-hour chart. Let me go back to that. Got a 90-day. Says that 4-hour chart shows a gap in price action. So could we rally back up to that point? That's a possibility. Do I think that is likely? I think that is highly unlikely. That's just me personally. But again, with the markets being so volatile today, anything is possible. We could challenge these levels of resistance. But I do think even if we do gap up, because of what's showing in the VIX, that VIX is hovering around an area of support. If we do gap up, don't fall in love with any type of rally, because I think it's going to quickly reverse. And I do mean quickly reverse. So we could rally up, gap up, hit this level, but I think we will quickly reverse and be headed right back down real quick. If you look at the RSI on the 4-hour chart, we hit oversold territory there. Market pulled back. We're not quite in oversold. I mean, overbought territory. I'm sorry, not quite in overbought territory right now on the RSI. But if we do gap up this morning, that'll put price action right in overbought territory real quick. And you see what happened yesterday with price action, with the markets having large moves down and then a big move up to reverse all of yesterday's losses. We can see the same type of move today. We can see a gap up and then a huge move back when the minutes get released. So I say that all that to say, don't fall in love with any rally that we may see in this market. Again, here's our VIX futures. It is in decision mode. So the VIX could pan around here for a bit, could pull back a little bit, but I don't think VIX is going to break out to new lows. I think ultimately VIX is going to continue to consolidate before it's ready to rally. So if you see the market's gap, and if the VIX starts running with the market, that is a definite danger signal for immediate reversal in price action in the markets. Now, a couple of things that also stood out to me. And I need to go to my Facebook page for this. I'm sorry, my Twitter page for this. At the beginning of my Twitter feed, I have pinned to the top of my Twitter feed the Wall Street Journal new 52-week highs versus new 52-week lows link. If you click on this, I pay attention to this every day, possibly a couple times a day, because it also shows where money is flowing into. So if you look at the time, it shows that this reading was last shared on July the 5th, but yesterday around 4:15. This was the reading. And when you first click on this link, it's going to take you right to this page. and you'll be right at there's two tabs over here. One says New York Stock Exchange, one says NASDAQ. First one is one it's always set up for, which is the NASDAQ. And if you look right below that, you'll see the new highs for the day or for that time frame. So yesterday at the close of business on July the 5th, New York Stock Exchange managed to squeak out 4 new highs. But if we scroll down just a little, you'll see how many new lows were created. 314 new lows created. That pretty much also lets you know that the bears are still in full control of this market, no matter what rallies we see. If you come to this tool, it's going to show you where is a lot of the money being flowing. It's flowing into the short side of this market, or people unloading their positions. Now let me click on the NASDAQ tab. Now with the NASDAQ, you see same area, you see 20 new highs that were created versus 493 new lows. See that? 493 new lows were created yesterday. Definite sign that the bears are in full control of this market. So no matter what kind of rallies you see, as long as the breadth of the market is still leaning bearish, the market is going to remain the same. So that's food for thought. And yes. And again, if we look at these some of these commodities, you can even look at gold. It's just been showing weakness. It's just been selling off. And that's a sign that the dollar is still strong. With a strong dollar, you want to have some of these commodities such as gold, it's not going to do well, as well as the overall market. So when you got a strong dollar, you can expect that the markets are going to struggle with this strong dollar. Here is the DXY, which is dollar futures, and look how strong it's been. Been extremely strong. Look at that. This dollar has been off the chain, which in turn will continue to put pressure on some of these commodities, and will also in turn continue to put pressure on the overall markets. And it looks like it wants to challenge possibly all-time highs. Maybe break out to 110. And even though it's in overbought territory on the on that monthly chart, it's that monthly chart. Yep. Look at the quarterly chart. It still has some room to run. And if it continues to run, it could easily run up to 121. So hopefully this is something that you guys can use this morning. I wanted to really dive deep into some early morning pre-market analysis for you guys to pay attention to. And also throughout the day, folks, pay attention to what's happening within overall options market, because the options market can almost be a telltale sign as well. What I've been noticing over the past several months is that there's been a lot of inflows into some folks making major bets or major hedging within a lot of stocks. A lot of put option activity has been brewing, has been flowing in the regular stock market with regular stocks, and also with some of these ETFs such as the IWM, triple Qs, the DIA, which is the ETF for the Dow Jones. It's been a lot of big action that's been taking place in some of these put options. So I'll probably go live again sometime later this afternoon or later this morning after markets open, maybe around 10:30 or between 10:30 and 11, somewhere around there. Got to make a run. But I want to see if there's a lot of option activity that's happening early this morning that can also give us a sense of direction for the markets for the rest of the day. So, but between now and then, folks, as you pay attention to the market open today, keep your eye on the VIX, keep your eye on S&P. So the S&P could easily give us a pop. It could happen. It could definitely happen. But I think if it do happen, we could be in store for a massive disappointment as we go throughout the day or go throughout the rest of this week. Because this trend line is still, we're still in this downward trending channel. No matter what happens today, markets are still in this downward trending channel. So we're still in this downward trending channel, and markets could easily rally up towards that level. That would take S&P right up to around 4,000. So if it does decide to gap up, we could easily gap up and hit this target here, and possibly run all the way up to hit this target, just below 4,000. And then after we hit that level, we could possibly be in store for a massive sell-off. All right. So govern yourselves accordingly, folks. Hopefully this is something that you guys can use this morning. I'm going to stop this live recording. I will try to come back again sometime after 10 o'clock and take another look and see what's going on underneath the surface. So you guys are very welcome, and enjoy the rest of your morning. And hopefully I will see you guys here in a couple hours. Oh. And again, sorry, Nicole, I think I just admitted you, but I just finished here. And again, I'll probably be back sometime after 9:30, folks. Again, I'll probably be back sometime after 9:30 to do another live review for price action as the market's open, because I want to see how this market starts this morning. All right, folks, I'll be back with you guys